What's up, freaks? This was brought to you by River. River's a Bitcoin company built by Bitcoiners for Bitcoiners the right way. There's no trusted third parties. They build all their infrastructure. They have free DCA because they know it's the best way to buy Bitcoin. So if you want to buy Bitcoin, you want to mine Bitcoin, you want to send Bitcoin over the Lightning Network, you want to plug into their Lightning Network API. If you're a developer, they're building all these tools for you. They also encourage self-custody. Again, they're Bitcoiners. They want to provide an on-ramp for you and then teach you and encourage you to take control of your own Bitcoin. And they're doing this. It's a beautiful company. If you do hold Bitcoin on the exchange, you can know for sure, since they don't rely on any third parties, they don't lend your Bitcoin out, they don't speculate with your Bitcoin. Your Bitcoin is held in a multi-sig wallet with 100% reserves. Okay? So go to river.com/TFTC, take advantage of the no-fee DCA. You set up your dollar cost average. You don't pay any fees on those buys. If you're a developer, they have their Lightning Network Services API that you can build on. You can send over Lightning. You can mine via River as well. You may have your exchange. You may be comfortable with it, but have you tried River yet? It's a question you have to ask yourself. If the answer is no, go try it. That's where all the Bitcoiners are hanging out. That's where I get my Bitcoin as well. River.com/TFTC. Thank you guys for listening. If you're listening on YouTube, please subscribe, set the notifications up as well. We're going to be putting out a lot of content this year. If you want to subscribe to the podcast feed as well, if you're not around your computer or not listening on YouTube, but you want to catch the podcast on the podcasting feeds, subscribe on your favorite podcasting app. And if you want to learn more about Bitcoin, I write a newsletter almost daily during the week. Go to tftc.io, subscribe on the website, and you'll get pure signal on Bitcoin, macroeconomics, geopolitics, whatever tickles my fancy that day. Thank you guys for joining us. Thank you for supporting the show. If you can subscribe, rate, review, goes a long way. We're trying to blow this up in 2023. Enjoy the rip. Yeah, so inflation's the topic du jour in the UK?
Yeah, it is for us, yeah. At least on the desk.
How bad is it? Do you notice it?
Yeah, definitely. You notice restaurant appetizers have doubled. Mains have gone up, 30, 40%. So bills are pretty dramatic. My food bill is definitely gone up 50%, you get sticker shock more than ever. Obviously you're anchored to old prices, but you look at things and think, wow, that is a lot more than I expected. And it's also shrinkflation. The shrinkflation's been going on a lot, where you buy something and it's 30 grams lighter than what it used to be. One bread roll, a chicken slice short, same price. So it's been going on for a long time.
Yeah, and I'm a bit ignorant. What's the wealth gap like in the UK? Is it comparable to the US? Are people really feeling it there, or?
Yeah, it's probably comparable. I think there's probably more of a social network, but still, it's pretty. I'd say they're more wealthy in the US than there are in the UK as well. So, but across the board, I think it's pretty impactful.
Yeah, it's interesting times. Like I was just saying before we hit record. Yeah, we're going to have that Weimar style ping-ponging between deflation and inflation.
Yeah, definitely. But, muddle through and see what the Bank of England... I don't know what the Bank of England can actually achieve, so we'll have to wait and see.
Yeah, and it seems like Rishi really stuck his neck out this week and say, if I haven't solved this problem in 6 months, I've failed. So you really put the target on your back there.
I don't know if anyone can solve it until... I guess you could depress demand so much that, But until you solve the structural inefficiencies that were created by Brexit and the pandemic, what can you do? There's not enough labor, and we can't import things that we use efficiently anymore. We import 50% of food from abroad, mostly from Europe, and that's, dramatically far more inefficient than it used to be, 3 years ago. So,
yeah. Interesting times. Great time to be alive. Interesting time to be in Bitcoin.
Exactly.
Haven't introduced the freaks yet. I'm sitting down with Townsend Lansing from CoinShares to talk Bitcoin, ETFs, trust, whatever BlackRock is launching. But as you may be able to tell, he's got an American accent, living in the UK. Yeah. You've been over there in Europe for quite some time, haven't you?
About 21 years in the UK, and then 4 or 5 years in Germany and Italy before that. So proper expat at this point.
Yeah. It's, do you like the expat life?
I mean, I've grown accustomed to it. My kids are European. My wife is European. So America's changed a lot since I left. So it's hard to judge. It's sort of now it's home. This is the place I've lived the longest. You know, I grew up in Dallas 14 years. And then since then it's been New York, Europe, and London. So pretty much that's kind of my frame of reference now.
Yeah. And to add some context for the freaks, I wrote a newsletter about BlackRock's filing of the Bitcoin grantor trust. Chris Ben Dixon, your coworker, DM me and said, Marty, you got this all wrong. You got to talk to my buddy Townsend about what's going on here. And so he introduced us. We had a conversation yesterday. And I'm really excited to jump into this topic. Obviously, it's one of the largest topics of the week, the last couple of weeks. And a lot of people are trying to grasp what exactly the structure of BlackRock's trust is and what are the chances that the SEC actually approves it. And obviously their filing has incited a number of other filings that have seen the signal that BlackRock put out there and like, oh, we got to get to market. And obviously at CoinShares, you guys offer a lot of exchange traded products, and you've been building them not only in the crypto space, but before you were heavily involved in the ETF space. So I think as a jumping off point, just let's talk about what you've been doing at CoinShares and the products that you have and how that may compare to what BlackRock's building.
Sure. I mean, it's important. They're different, obviously, because the European market, the regulatory regimes, and then necessitate different structures. But at CoinShares, we've been building what are known as kind of exchange traded products on digital assets. The European market is far more developed than the U.S. In terms of both the number of issuers and the number of products. We alone have 19 different products from 2 different issuers listed on major exchanges throughout Europe. So Xetra in Germany, SIX in Switzerland, Euronext Amsterdam and Paris, and also NASDAQ Sweden. Those products cover not just Bitcoin and Ethereum, but they also cover a wide variety of altcoins. We also offer to share staking rewards in products where staking is possible. We have about 7 products that share staking rewards with kind of an annual or daily accruing, but annual percentage around up to 5% for things like Polkadot. It's a much more robust market in Europe for exchange traded products, mainly because the regulatory regime is a lot more friendlier and a lot more favorable. We've seen, with the exception of the UK, European regulators who approve prospectuses and also the listing authorities, much more willing to list digital asset products. So we have a very robust infrastructure. In the US, obviously, the quest for the spot ETF has been going on for, I think, probably since 2011, 2013, maybe when the Winklevoss filed the first one. Overall, the U.S. product, the BlackRock product, is fairly simple. It's a trust. It's a trust. There are 2 ways to structure ETPs, ETFs in the United States. You either use a 40 Act fund, which is also a trust, but it falls under the 40 Act regime, or you use what's called a grantor trust, which doesn't fall under the 40 Act regime. The 40 Act regime is the regulatory regime, like the 33 Act, that governs the rules relating to investment companies. The reason... So just as case point, when the SEC and the staff were to allow the futures-backed Bitcoin product, they insisted it be wrapped into a 40 Act fund. That gives some extra protections. It also has a wider regulatory regime than you would find in different structures. For a spot product, it's unlikely you can use a 40 Act fund. And if I get too jargony, please jump in, and remind me to explain myself. Mainly because the eligible assets that are available to a 40 Act fund are defined by the IRS, and they're kind of split into good assets and bad assets. And if a 40 Act fund has too many bad assets, then it loses what's called its pass-through taxation, i.e. there's double taxation, once at the corporate level and then also the investor level, where traditionally a fund would only have a pass-through taxation where only the investors would be taxed, that the fund itself isn't taxed on its gains from dispositions of what it holds. That's really important for most investors. The grantor trust structure allows for that pass-through taxation, but it has some restrictions on like what you can hold and how you do it. But in general, that's the accepted structure for alternative assets, single asset. It started with gold. Some of your might be familiar with GLD, which is the world's largest gold product. It was probably the first grantor trust to be sort of listed as an ETF in the United States. It offers exposure to gold. There are other products now out there as well, but that is the prevailing structure that BlackRock is using for the Bitcoin product.
Yeah, the grantor trust. And does that dictate that you can only hold one commodity in the trust?
You can only hold one asset, and you have no discretion over that asset. Getting more jargony, the grantor trust idea actually comes from inheritance tax. It was a way of essentially granting an asset into a trust for inheritance purposes, and therefore the rules are a lot like, you can't give people discretion over how to use that. It can't have, it has to be a limited set of assets. The reason it is used is because if you comply with the restrictions, you get that all-important pass-through taxation, which means that you don't have double taxation. Investors, if they're investing in an investment product, hate double taxation, rightfully so. They probably hate single taxation as well, but they definitely hate double taxation. And product structures like me go to great lengths to avoid that as well.
Yeah, because when you have the fees, the management, the performance, it's like, okay.
And so, I think what would happen is if you didn't have pass-through taxation, every time there was a redemption, the trust would pay a tax on that redemption, right? Realizing gains. And then also when an investor sold, they would also end up paying that again. So in many ways, it's a better structure. It's a common structure. I mean, BlackRock has not gone to the forefront of innovation at all in this structure. It's really off the shelf. It's what we use what is used in the US for all the precious metals. So platinum, palladium, gold, silver, it's the exact same structure. And it makes sense that iShares and the others are using this. Even the Winklevoss twins, who used a very well-known attorney, Kathleen Moriarty, unfortunately passed away earlier this year, but she was sort of the godmother of these types of structures with GLD. So she was a real, and so what they're doing is not particularly innovative in that sense. What's innovative is the question of whether the SEC will approve it or not.
Yeah, that's the big question, because we've had, in the last few weeks alone, we've had the SEC file complaints with Coinbase and Binance about their exchanges, what they're offering. Binance, how they're maybe wash trading and commingling funds, and with Coinbase, the unregistered securities they may or may not be offering their clients. And so that's been the big question, is you had this enforcement action happen against those two exchanges a couple of weeks ago, and then quickly after, BlackRock came out with this filing. And interestingly enough, we'll be using and leveraging Coinbase for their custody, and that has a bunch of people wondering, like, was this enforcement against Coinbase and Binance sort of a clearing of the path so that these institutions could come in and say, all right, it seems like there's some clarity. We can offer these products now.
I mean, it's very speculative. It's possible. I have been the last decade and remain somewhat skeptical that a spot ETF will be approved. From strictly analyzing what the SEC has said to every single issuer that has applied, going way back, even to the first application by the Winklevoss twins, and it's refined over time, but the message has been very, very simple, in my opinion. And this is something that, people who know Bitcoin can answer better. But the SEC has said, you have to be able to show to us that a meaningful, if not substantial amount of volume for Bitcoin is traded on an exchange that has what's called a surveillance sharing agreement with the exchange on which the ETF will be listed. And that essentially means that, the exchange where most of the Bitcoin is traded agrees with NASDAQ or NYSE, the securities exchange, that they will share information on possible market manipulation. The problem has been to date, and again, I'm not necessarily the right person to comment on the extent of where the volume is, that the vast bulk of Bitcoin volume sits on exchanges that are generally offshore. The CME, which is the one regulated exchange that would probably have a surveillance sharing agreement, is still a very small part of that volume, and I think the SEC are going to have questions. Just to give a bit of context, these questions did come up with gold in the conversations way back when the first gold product was listed. The SEC did raise them, probably not in the same detail they're raising now, which is something you see Commissioner Pierce point out every once in a while. It also came up when we launched the first Palladium Platinum products. I was involved in building those after kind of 2010. The SEC took a lot of comfort, one, from the fact that the futures exchanges it was super important in the trading, and two, that the OTC market, the spot market, was run predominantly by regulated financial institutions, mostly banks, who were involved in pricing gold, platinum, palladium, silver. They used to be called a fixing. It's an unfortunate word choice, but I think the SEC is looking for similar market infrastructure or structure here, and I question whether we've arrived at that point. That's one man's speculation, but I don't see how, unless iShares or the others can really point to that volume shift, that the SEC is going to approve the product.
What type of volume are they looking for? Because Binance is obviously the largest exchange in the world. Coinbase is number 2.
Well, see, but not even so. One of the filings recently also pretended to have a surveillance sharing agreement with Coinbase, but they didn't, right? And the SEC pointed that out. I was like, it's not the same thing. They want to see, I would say, off the cuff, a starting point of 50%. 50% being on CME or some other proper exchange, right? I don't think we're anywhere near there. I could be wrong about that number, but it's definitely not going to be 10%, for example, right? The SEC's fundamental concern, and Lisa, they've expressed from the multitude of rejections they've issued, has been, we can't have a situation where someone can manipulate the price of Bitcoin, say on offshore exchange X, and that manipulates the price of the ETF on the NASDAQ. The SEC is not responsible for the price of Bitcoin offshore exchange X, and they admit that. But they are responsible for the price of the ETF on the NASDAQ. And if that's manipulable, they will not list it. And they're waiting to see a market dynamic that gives them more comfort. Now, whether BlackRock is a big ship, right? It is a massive leader in the industry, and the SEC do have history of working with those larger institutions to kind of launch innovative products. It might be that they think they have an in, or it might also be that BlackRock feel that it's a timely moment from both a reputational and also positioning perspective to at least put themselves in the mix in case the SEC does loosen things. But I don't see it as a significant game changer in the SEC's analysis of whether or not they're willing to list it.
Yeah, because that's when you bring up like price manipulation. That's another headline that's been in the news this week, is the True USD minting of $1 billion worth of that. And
wash trading, alleged wash trading, on Binance, the concerns that FTX have. I mean, those are the things that are going to indeed make the SEC more conservative when they're looking at what they're going to want proper regulated exchanges to have a meaningful amount of volume.
Yeah, and that's the big question, because again, BlackRock's 575 for 576 of getting these types of products approved.
Yeah, and I think, look, if anyone can do it, they can. But I mean, clearly, there's the other issue that I think a lot of people in your community are aware of, is the so-called Administrative Procedures Act, which is essentially the APA, essentially sort of the rules under which the SEC is meant, or any authority is meant to kind of regulate, right? And the big claim, the big fear that all the regulators have is that they're kind of deemed arbitrary and capricious by a court, and then they end up getting sued and so on. It would be hard for the SEC to justify at this point without satisfying their previous request for a meaningful portion of volume on a regulated exchange. That act, if they were to kind of approve one product over another without satisfying those milestones they pretty much have laid out in rejection after rejection. I mean, literally, it's the very first rejection was a bit waffly. The second was clear, and then the third one was like cut and paste until they refined that argument, so they were insulating themselves from any, in my opinion, just kind of speaking as an ex-securities lawyer. I don't practice anymore, but did have experience when I practiced for the staff. What I saw is an attempt to insulate themselves from any complaint under the Administrative Procedures Act.
Yeah. It's I've been apprehensive too. I've obviously the whole Bitcoin communities, a lot of the community is getting very excited for this. The ETF's coming. It's going to pump our bags. It's going to be massive bullish tailwinds for the asset. And I'm just having PTSD going back to the Winklevoss first, applying for it. And I'm like, I've learned to never hold my breath for the ETF, essentially.
Yeah, I think it's not all bad news. I agree with you totally. It's not all bad news. I think BlackRock's filing is sort of another milestone in terms of institutional adoption support. Clearly, BlackRock's institutional adoption, iShares, like it is a big mover in a space that has been more or less dominated by startups and more innovative companies. BlackRock's obviously, it's a vote of confidence for Bitcoin, and I think there's benefits from that. It definitely gets, on our side, when we talk to institutional investors, admittedly mostly European ones, they're taking notice and they're wondering not so much on will that spot be that Bitcoin ETF be approved as like the seminal moment, but so much like, oh, this actually shows that one of the world's largest asset managers, owner of trillions of dollars of AUM, largest ETF issuer, is taking this asset class more seriously, which is not a insignificant milestone in my opinion. Even if it doesn't get approved in the next 12 months, it's still an important milestone, I think, for post FTX. I'll be honest with you here, and I know probably people in the U.S. who work with traditional financial, traditional TradFi and institutional investors, what I'll call kind of real money in that sense. There was a lot of depression because FTX set us back quite a lot with a lot of people. In the sense that, we were having a lot of institutional discussions and that dried up. And I see what we're seeing now is a slow uptick, and this BlackRock news is another sort of, for me, smaller, less meaningful milestone than an actual ETF, but still an important one and something that investors are paying attention to, because when iShares BlackRock speaks, people listen. To go back to that old Dean Weber ad, dating myself.
Yeah, people really like signals from institutions of that caliber, if you will.
Yeah, as an ETF provider, when we talk to clients, we're like, look, iShares is interested. There's legs here. This is a real asset. You need to figure out how this fits in your portfolio. And that'll be a benefit. It won't be as significant as the actual ETF, but it's still a benefit.
Yeah. Yeah, going back to the FTX, while it was incredibly painful for the industry, and I could sniff that SBF guy out from a mile away. I was calling him out like 2 years ago, and it obviously, that company did build up a significant amount of risk that blew up eventually. But I do think in the long run, we'll look back as that blow up as something that was actually pretty beneficial, because it helped people realize the risk inherent in this industry, particularly the counterparty risk that exists. And then on top of that, it really helped drive home this demarcation between Bitcoin and quote unquote crypto. And I think you have to I imagine that BlackRock sort of had their hand forced by customers that were demanding like, hey, I want exposure to Bitcoin. And
definitely. I mean, we've seen, for years, for example, and you'll know this probably, like a lot of the institutional investors we speak to, they've had portfolio managers who trade Bitcoin in their PA, their personal accounts, but can't quite convince the institution to do the same. And we're seeing a bigger conversion of that as more and more clients, as well as those portfolio managers, say, look, it's time to start to come up with a Bitcoin strategy. And so that's all good news. I think it's good news. I think it's a welcome news. I don't want to dampen the excitement, because it is welcome news, and it's something that we talk to clients about here in Europe, and I imagine a lot of people are talking to clients in the US about it, and I'm talking institutional clients, not the retail side, about the fact that the adoption is continuing to pace, and the BlackRock iShares is a big signal that's the case.
Yeah. And so let's run with the assumption that it does get approved. I'm still skeptical, but of all the filings that have been filed, I would be lying to myself if I didn't think this one had the highest probability of getting approved. And so going back to like the grantor trust and what they will actually be offering, how does the product work from your view?
Sure. I mean, it's an access tool, right? It is a wrapper for exposure to Bitcoin. The way it works is a couple key things. It's open-ended. That's an important thing. Open-ended means it can issue and redeem freely. And why that's important is because that is the mechanism that allows it to track the price of Bitcoin. So if we compare to the Grayscale product, which is close-ended, what you have in a closed-ended fund, because it can't issue new shares and cancel old shares at will, is you have so-called discounts and premiums. But an ETF tracks the price of its underlying because it's open-ended, and it does it for a fairly simple arbitrage function. If it has what's called authorized participants, so these are institutional traders who work with the issuer, and if there's demand in the market for for more securities, that AP has a contract with the issuer where they can deliver a coin in and get the security. If the security is mispriced in any way, the AP can arbitrage that difference, right, with the underlying market or vice versa, and essentially earn a risk-free return until that arbitrage opportunity eliminates, i.e. until the price matches the underlying. And that's an important way all ETFs, exchange-traded funds, essentially track their underlying, is that arbitrage function. So the way it works is investors will hold a unit of the trust. That unit will be traded on NASDAQ or NYSE. I haven't looked at the filing. I think it's NASDAQ. And it will trade, let's say it's, one Bitcoin, one security equals one Bitcoin. It will trade at the price of one Bitcoin. There will be a fee. That fee will decay daily. So let's say it's 1%. So every day the fee will decay by 1 over 365 times 1%, i.e. the amount of Bitcoin it's worth effectively will decay. And other than that, it trades like an equity. You can buy and sell it like an equity. It'll track the price of Bitcoin. It'll have both a listed price, so a daily price on the exchange, and at the end of the day, there'll be a net asset value, actually what the trust itself says it's worth.
Mm-hmm. And will you be able to buy partial shares?
That will depend on your broker. Generally speaking, fractionalized shares are up and coming, but not as easily as you can buy fractionalized Bitcoin.
Okay. So if you're buying into this trust, if they don't have fractional shares, you'll have to buy.
That's a facility that brokers may offer, right? Depending on, I mean, BlackRock will price it so it's a lot less than one Bitcoin. It'll be, probably generally you aim to launch these at $10 to $20. So, and you can do that because you can designate how much it's worth relative to coin at the start, right? Mm-hmm. But yeah, you can't. So fractionalized shares are much more prevalent in the U.S., but it's much more of a function of the broker than the exchange, how the broker allows you to accrue your ownership.
Okay, that makes sense. And then another interesting thing about this particular structure, when you compare it to GBTC particularly, is that you'll be able to take Bitcoin in kind. And there's some nuance with who will actually be able to take delivery of Bitcoin from the trust.
Generally speaking, it's only the APs. I haven't looked at it. I don't think they're offering a physical redemption facility. They might. We do here in Europe. We allow investors, if they want to redeem directly. It's not as common in the US, but it's possible. But generally speaking, yes, that's part of the open-ended structure, is that they have a set of institutional investors who can take in kind for exchange securities, and then who can, and that's the primary market, the market that the APs trade on, which is where that tracking function comes from.
Yeah. And yeah, so the APs are the authorized participants, who are typically broker dealers, right?
Yeah, they're typically broker dealers who trade on exchange, and they're responsible for dealing directly with the issuer and also with the markets as like the market maker of last resort, if you will. So when a normal investor, like one of your listeners, buys in, if they trade through Schwab, that trade, if there's not enough, it will eventually make its way to an AP who, if there's not enough inventory, they'll go to the issuer and say, I need new shares. And they'll give the issuer a coin and get shares in return.
Yeah. That actually brings up a really interesting point. I actually had a discussion about this on another show yesterday, is how do you, because Bitcoin's a whole new animal. There's only 21 million Bitcoin.
Yeah.
It's much different than any other asset that's been put into this type of fund structure. And again, running with the hypothetical that it gets approved, it gets some demand, and you get a lot of Bitcoin in this ETF. Do you see any problems with like share creation and the ability to get the underlying asset?
There shouldn't be. I mean, also every ETF anywhere in the world is dependent on the liquidity of the underlying, right? So it can never be, fundamentally never be more liquid than the underlying itself. I mean, there are cases where you might see more liquidity, but the actual limits of liquidity are tied to the limits of the underlying, which is sort of also kind of it's a condition for launching an ETF on something, that it has to have sufficient liquidity to allow for it. I mean, every ETF suffers this problem. It's like you see, for example, you might see when the Greek stock market closed, ETFs were struggling to, redeem because they can't access the underlying. So yes, if it has demand that exceeds what's available, like volume liquidity in the marketplace, then the creation and redemption mechanism could break down. Based on my rudimentary understanding of volumes in the Bitcoin space, I think that's unlikely.
Yeah.
Right? Likely. I think, but again, you never know what's going to happen in the new landscape. But right now, what we're seeing, we don't have any liquidity problems, especially not in Bitcoin.
Yeah.
And I think you probably could take down a few $100 million of liquidity, maybe split over 2 days, but you could still do it.
Yeah. Because that's a big question. There's 2.3 million Bitcoin that are held on exchanges, and the rest, 17 some odd, are held in wallets that individuals or businesses control. And this thing does catch on. It's like, and I guess the point I'm trying to get to is like, how does the mechanism work? Do they have to get the Bitcoin first to create the shares, or the shares create it and then they go get the Bitcoin?
You have to deliver Bitcoin. So yes, they will have to go into the market and they will have to source liquidity. So, and if that means the price goes up, then yes. We've not seen, I mean, even some of the gold, platinum, palladium, silver, as a loose analogy, a lot of examples where the ETF dramatically distorted the market, but it definitely drives price. It definitely has driven price.
Yeah, I mean,
I think
after GLD launched, it went up, what, like 5x or something like that?
I'm not, talking out of turn to say that, in the event, I mean, like any access, if essentially an ETF is an access tool, and if it opens up Bitcoin for a number of investors, institutional and otherwise, who aren't trading directly on exchange now, then that will be a new source of demand, which presumably on the basic theory of economics should drive price.
Yeah. No, that's an important clarification there. They have to go out and get the Bitcoin before they can issue shares for that Bitcoin.
Same in the US and also here, we don't ever issue shares unless we have the Bitcoin delivered first. Okay. In our wallet. As soon as we confirm it's in the wallet, we issue the shares. If it's not in the wallet, we never issue shares.
Yeah. That's the one thing I was worried about. If they're like issuing shares and they go out to market, they can't get the Bitcoin. That seems like and so how do you, particularly here in the US, again, if BlackRock gets approved, do you see what's the typical sort of landscape and distribution of ETF shares of particular assets? Do you think this is a winner take most, winner take all?
Generally, it's first to market wins. As you see with BITO, right? I mean, they launched the futures. They've taken 99% of the AUM. I think a couple others came after them, got nothing. So it is true that the first ETF provider in the US to launch will be the winner.
Yeah, that's the.
I mean, you get subsequent people who launch. It's very hard to differentiate in the space. So what do you compete on? Price, which is good for the investor, right? I mean, but you saw it with gold. GLD launched at 40 basis points. A few came in, and now I think gold in the U.S. trades costs as low as 17.5, maybe even lower. I have to admit, I haven't 100%, and that would be the expected sort of process if people try to compete.
Will BlackRock have the ability to rehypothecate the Bitcoin within the grantor trust?
No. Generally speaking, no. The trust can't do anything with the assets. That is. Yeah, actually, I'm pretty 100% certain. That's one of the things about the grantor trust is once you give the assets to the trust, there's no discretion or control over that asset. It is essentially for the pass-through taxation. You've given that asset, and the trust has to just hold it.
Okay.
It can't do anything.
So you don't see
as a matter of policy from a product development perspective, we would not permit that either as a product developer, whether in Europe or in the US.
Yeah, because that's one of the big worries out there is if
Yeah.
BlackRock amasses a large sum of Bitcoin in this trust, and then they're going out and doing like BlockFi, trying to get yield on it.
I mean, when I was in the gold space, people used to accuse us and also World Gold Council, State Street, of reapothecating gold, but it didn't happen. I mean, the gold sat there in the vault, still does. It's not, generally speaking, something that ETF issuers are interested in, especially in these types of assets. The gold, it just sits there.
Yeah, because that is, as we've seen throughout time, FTX, BlockFi, Celsius, extremely risky.
No. Yeah, I mean, look, there's an element of trust. I don't deny it's not trustless. It's intermediation, but yeah.
Yeah. We discussed this yesterday when we had our call. That's the other thing too. Like Bitcoin has these native properties, and you've sort of come up building these exchange traded products, whether they be ETFs or ETPs, and in the analog world, gold, precious metals, they're really just physical assets that sit in a vault.
Yeah.
And you can't really do anything. The Bitcoin is a completely different animal in terms of it being programmable, and particularly from a security perspective, like being able to custody it in unique ways via multi-sig, multi-institution, multi-sig. Like, how do you see the like traditional finance space embracing these properties of Bitcoin to deliver better products? Obviously, BlackRock is going with Coinbase for custody. That is, I'm sure their security is fine, their wallets are fine, but they are one entity of many that could be involved in a multi-sig quorum. Like, do you see the products evolving to a point where they leverage these properties?
It's difficult, I think, to see a product leveraging really at the same level you can in the direct crypto space, mainly because there's obviously a need for a certain amount of liquidity and functionality with the creation and redemption process, right? And there's a need for an independent custodian as well, third party. What we generally look for now, at least in this stage of the evolution, is we try to diligence to the best of our ability just the security protocols and the way it works, and we need to marry that with the need to actually have an ability. Classic thing is like, we can't hide our key in a vault and switch, right? Because I need to constantly take coin in and transfer coin out. Like, I can't have someone trek up to the vault type, as an example, right? And I don't know the full extent of the properties you're talking about, but generally speaking, we're looking for an institutional quality custodian who offers the highest level of security protocols, fits within the liquidity needs that we have, the creation redemption process, which can we can get multiple creations or redemptions or both in a day, right? And and gives us kind of the level of security that we can then assure our investors functions. Is that as probably as innovative or as cutting edge or even as secure as some of the newer developments in Bitcoin? Probably not. I think we're not. We're looking for a stable name that we can work with, and that we know we can reduce our operational errors and have a lot of scalability.
Yeah.
I'm not saying that the solutions you're talking about don't allow for that, but I think we tend to be a bit more conservative about that. And I'll speak from my own sense, is that when I diligence custodians, I was basing it sort of on the way the gold custodians worked, and then educating myself, and the company is educating me about, how and the best of breed security protocols, and trying to marry those two.
Yeah. Yeah. And going back to like the creation and redemption process, like obviously Bitcoin is going through its monetization phase, and a large portion of the people that hold this asset hold it for the long term. Do you see like these types of products acting differently than traditional exchange traded products, in the sense that people actually don't redeem them as much? Or do you think?
No, I think the investors, I think people tend to be counter-cyclical. They buy when the market's falling, they sell when the market's high. In our own experience, we have one of the first digital crypto Bitcoin products out of Sweden, and it's made a lot of people very wealthy, relative to other. And we've seen them selling as the price is topped, especially when it's 65. People will take profits. I don't think they're. I'm not going to make too much speculation about the crypto community, but the HODL idea, which is as much of kind of a belief in the community as the future of Bitcoin, I think is probably less prevalent in the types of investors that we attract. They tend to have 3 to 5 year investment strategies. They'll figure out where Bitcoin fits in that portfolio. They'll have targets for sale. They'll have a wide variety of tax harvesting issues as well, and so on. And they'll look to act. They will not be fervent believers in the same way, nor will they be thinking that Bitcoin's the last vestige of protection against the end times for fiat. if I don't want to mischaracterize the pessimistic view of the community, but
is it pessimist? It's optimist. So we got the lifeboat.
Well, okay. But they're much more attuned to gains and losses and to their portfolio strategies than I'd say the traditional Bitcoin investor who's hodled for years.
Yeah. No, that's why I like talking to you, because you bring a very agnostic view to this. You're just building products.
Yeah. I mean, I freely admit that. I think it's amazing what's happened. I can see the arguments, but I really I'm more about building financial products on underlines that people have demand for. And if I can do it like Bitcoin, if there's liquidity and there's robustness, and I can do it in a way that provides people access, but is honest and honorable, then I'm definitely happy to build product.
Yeah. So what do you put the probability of this getting 10%. Approved? 10%.
10%.
That low.
I'm very skeptical. I am. I just don't see it. Unless someone comes to, and we'll have to monitor the filing and see what kind of reports they file. And unless someone comes and shows me that that the conditions are satisfied, or unless there is an unknown political drive behind it, which I guess maybe I'm mispricing that, I see it as 10%.
Yeah, I think the latter might be the case. I think.
I could be completely mispricing that. So maybe the rational brain in me is like looking at the facts, and I should be looking at the.
Well, Townsend, I don't know if you know this. People call me Marty Jones because I put my tinfoil hat on every once in a while. And,
fair enough. We'll see. We'll see.
Tinfoil hat is on right now. It seems it's almost too perfect. The series of events. You have the filing.
Yeah, you could be right. It could be
Jerome Powell this week. Crypto has staying power. It does seem like there's no clearing of the way to roll off the red carpet for BlackRock.
We could be back here and be like, damn, I was wrong. And we could be very right. I mean, either way, we're a winner, right? I think, either way, if it doesn't, my prediction's correct. And if it does, then institutional adoption is another major milestone, which is really good for us.
Yeah. Yeah. I know you're agnostic towards it, but do you see Bitcoin changing the way I mean, we touched on it a bit earlier with multi-sig and stuff like that, but
I mean, I think some of the technology will automatically, I would think that at some point you're going to need to shift to real world use, right? And Bitcoin will find its way. And I think obviously there's real world, non, techno-centric use. But I think finance is already looking to learn the lessons of, distributed ledger technology and Bitcoin. And obviously it's driving even more the question of fiat currency. I mean, you've seen that come up more than it ever did, even when gold was at its height. I think Bitcoin's made people question current inflationary environment. What is the role of ever printing fiat, and how can we adjust against it? So I'm hopeful that, eventually there will be uses that expand beyond the kind of just the crypto community.
Yeah. Fiat wasn't a really well-known term until I would say the last 5 or 6 years.
No, gold bug. No, definitely not. I mean, I didn't learn it until I was working in the gold, but I had a lot of people who the gold bugs are as fervent about gold as the crypto community is about Bitcoin. And beyond end of the world, and you're kind of like, well, now here I am again, right? I mean,
We love our gold bugs. They have
yeah,
manual Bitcoin. They just need to realize that Bitcoin's gold with wings.
definitely.
Yeah. Well, I appreciate you coming on and breaking this down for us, because obviously it's big news this week. Do you think there's anything we didn't touch on that we should probably mention about the product structure?
About structure. So if there are any follow-up questions, I'm happy to write some stuff down. Apologies if I got jargony, but no, I think it's great. I really appreciate the opportunity. I think obviously the audience you build and what you're doing is really, really fascinating. So well done on that. And thanks for letting me speak. It's been really interesting.
Yeah. We have an agnostic financial product builder on the show, and I think it's good. You have to check your priors every once in a while. Yeah. I'm obviously all in, socially, professionally, financially. Sometimes we need some pragmatic thinkers that are just looking at this cut and dry.
You're waiting. I mean, I think I also heard of Bitcoin very early, but I was very cautious, and sort of that caution has just developed an agnostic approach. But so far, Bitcoin has resisted every single agnostic doubter, agnostic or doubting Thomas out there. So, I mean, that's got real legs. And I think, every day it survives and continues is another day that the doubters are proven wrong.
Yeah. I don't know how you can be agnostic working with Chris. He's one of the...
We have a lot of really interesting chats. We have a lot of really interesting discussions. And,
What do you disagree with him on most?
I think, look, I tend to, as I'm agnostic, I'll free them sort of, I am and I remain kind of a believer in intermediation. I don't think disintermediation is a good in and of itself. I think obviously there are a lot of flaws in the way intermediaries work, but I still think they provide some value. I tend to be much more of an institutionalist. And then Chris and I converge on some libertarian beliefs around like the overreach of regulation as well. So we sort of debate around like, our intermediary is good, but we also sort of agree that regulation, the administrative state, has grown to a point where it's pretty uncontrollable.
Yeah. Yeah, as is evidence here in the United States. It's a pretty big shit show.
I mean, nowhere else can you get arrested for importing the wrong type of fish, even though you didn't know it, right? Or onto government land. And I mean, yeah, there's no doubt.
Yeah, it's one of the Marty Jones lines is, are we actually free?
Yeah, Chris and I debate that a lot as well.
Well, I know it's late afternoon on a Friday. I don't want to hold you up on your Friday afternoon before you go and buy a very expensive dinner because inflation's going crazy.
Yeah, unbelievable. Like Argentina, apparently they're all out. Yeah, listen, Marty, thanks so much for having me. Real pleasure to speak to you. And maybe if I make it back to Texas, we can catch up in person.
Yeah, you got to get your ass back to Texas. There's a lot going on down here. You got to come to the Bitcoin Commons. We'll have some of the hardcores push you away from any intermediaries. Everybody working here is like trying to eliminate all the intermediaries.
I know.
All right, Townsend, it's been a pleasure. Thank you for the work you're doing. Thank you for educating us.
Great.
Enjoy your weekend.
You too. Thanks very much.
All right, peace and love, freaks. Take care.